Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 10th, 2025, and we're diving into Constellation Brands' Q3 fiscal 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Constellation Brands, a leading producer and marketer of beer, wine, and spirits, has just released their Q3 earnings. There's a lot to unpack, from their beer business performance to strategic divestitures in wine and spirits.
Revenue and profitability overview. Let's start with the top line. Constellation Brands reported net sales of $2.464 billion, which is relatively flat compared to last year. However, their reported EPS came in at $3.39, with a comparable EPS of $3.25. John, what does this tell us about their profitability?
Despite flat net sales, Constellation Brands has managed to deliver a reported EPS of $3.39, which is above the forecasted $3.34. This indicates strong profitability, driven by disciplined pricing actions and cost savings. Their operating income also saw a slight increase to $793 million, reflecting efficient cost management.
Beer business performance. The beer segment seems to be a standout performer. Net sales grew by 3% and depletion volumes increased by 3.2%. Can you elaborate on the factors driving this growth?
The beer business continues to outperform, with Modelo Especial leading the charge as the top brand in dollar sales. The segment's operating margin, however, decreased slightly to 37.9% due to higher marketing spend. Nonetheless, the growth in shipment volumes and favorable pricing have bolstered their performance.
Wine and spirits challenges. On the flip side, the wine and spirits segment faced some challenges, with a 14% decline in net sales. What are the key issues here?
The decline is primarily due to weaker consumer demand and retailer inventory destocking. The divestiture of Svedka is part of their strategy to focus on higher growth, higher margin brands. Despite the challenges, their remaining spirits portfolio, particularly higher-end craft spirits, showed promising growth.
Strategic initiatives and future outlook. Constellation Brands has been active in returning value to shareholders and setting ambitious cash flow targets. Can you discuss their strategic initiatives and future outlook?
Absolutely. They've repurchased approximately $220 million in shares, reflecting their commitment to shareholder returns. Their operating cash flow target has been raised to $3.1 billion, with a free cash flow projection of $1.6 to $1.8 billion. Despite lowering their EPS guidance, they remain focused on disciplined capital allocation and brewery investments.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $3.34, but the actual comparable EPS was $3.25. How should investors interpret this?
While the EPS came in slightly below the forecast, it's important to note the broader context of their strategic shifts and market conditions. The company's focus on long-term growth and profitability, despite short-term fluctuations, is a positive sign for investors.
Key takeaways. In summary, Constellation Brands has shown resilience in their beer segment while navigating challenges in wine and spirits. Their strategic focus on premium brands and disciplined capital allocation bodes well for the future. Thank you, John, for your insights.
Thank you. It's been a pleasure discussing Constellation Brands' performance. Their strategic initiatives and focus on cash flow generation are key highlights for investors to consider.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Constellation Brands' performance in the comments below.